one of the things that interests me about your world, to which I'm very much an outsider. I mean, we have Sam Bankman-Fried, who founded FTX, and we have 𝗬𝗲𝗀𝗲 Haun, who's now founded her own venture capital fund, which invests principally in cryptocurrency businesses. And I'm an author who has written lots of books, none of them about cryptocurrency. So I'm an outsider here, and know very little. So I'm going to be asking the kind of questions that someone who knows very little asks. And one of the things that interests me is that no one has grown up wanting to be in cryptocurrency. It's all too young. And everybody here has a story about how they collided with this industry and got attracted to it, and kind of stuck to it. And I'd like to start with that. I'd like to hear both of you tell me a little bit about why you're even here. And why don't we start with Sam?
Yeah. So I was a quant trader, and I was trading a lot of things that weren't cryptocurrencies. ETFs primarily. I left that job, and it really was the environment where like you just walk down the street and people are talking about crypto. This is late 2017, and I knew nothing about. I didn't know what a Bitcoin was. I couldn't define it. I didn't know what a blockchain was, but I knew there were assets that you could trade, and there's so much hype around it. It sort of like triggered my like probably there's not enough liquidity in the system senses. Like every time that you hear everyone talking about a financial asset, there's way more demand than liquidity. And so I sort of like was like, man, I wonder if there's good trading to do here. And just did like the most cursory sort of like, analysis you could. And it sort of looked like, oh wow, maybe there are actually ridiculously good trades to do here. And I jumped in, and I think I spent like a year trading before I could really tell you what a Bitcoin was. I think yeah.
So you were looking at it as a market that seemed more inefficient than other markets.
That's right. That's how I first got in. And but the more that I started trading, like, okay, to actually complete a trade, I had to dive into the actual operational aspects eventually of crypto. Like I had to know how blockchains work, if only to transfer assets between exchanges. The other thing that I learned though, and maybe the more impactful thing, was for the first time I had to run a bank account. I mean, I technically had a bank account before, but it sort of got abstracted away from me. Now I had to actually be like, all right, there are dollars sitting here, and I need them to be there by 3 p.m. And like, how do I make that happen? And it was unbelievably difficult. Like when doing crypto trades, the hardest part was sending dollars around. And after like a year of that, I started to actually get a sense of like, why anyone cared about crypto in the first place. Like I think I didn't have a sense of all of the problems with the traditional financial ecosystem until I had to actually work with it.
So you don't come to it as a religionist. You don't come to it because you have some particular passion for cryptocurrency.
No.
You were just looking for an opportunity.
Yeah, absolutely. And I think it was only over time that I started to get an appreciation for like why it had value sort of in the first place.
So we're not going to do your whole biography, but I'm just kind of curious how you go from, we're going to eliminate inefficiency in Bitcoin prices, to, I'm going to build an exchange.
Yeah, well, I was using a lot of the exchanges, and it was not fun. Like, I mean, I liked my job. It was a fun job. But, like, one of the most frustrating parts of it was the exchanges just didn't work.
Right.
They're broken in so many ways that, when you take a step back, you're like, all right, it's not just that there are, like, a few things they need to fix. Like, a lot of these companies should not be crypto exchanges, and some of them no longer are.
So it wasn't really set up for someone like you.
No, it wasn't at all. And there's sort of this like, I came from traditional finance, and again, it wasn't until I had to build infrastructure with it myself that I realized how broken that was. But on the other hand, there's this inviolable or supposedly inviolable property that like you buy something called like a Bitcoin future, and at the end it's worth a Bitcoin. Like that's sort of what it is. Now, we saw with LME and nickel that maybe that's not always so inviolable in traditional finance, but it also wasn't in crypto at the time. Trades were getting busted all over the place because risk management systems just did not even sort of work.
Right. So very briefly, talk about just how the beginning of FTX.
Yeah, I mean...
Because this thing has come out of nowhere. I mean, it is, to me, amazing that like 3 years ago, nobody knew who you were. And now you're sitting on the cover of magazines and you're a gazillionaire and your business is like one of the fastest growing businesses in the history of the planet. And so, I mean, I think, this is a naive view, and we're about to get to Katie here, but you're breaking land speed records. And I don't think people are really noticing what's happened, just how dramatic the revolution has become. There's a status upheaval that's going on in the financial world, and you're sitting right in the middle of it. So just like, very brief talk about the beginning of the exchange, and then I want to pivot to Katie. Yeah,
I mean, basically, and I think the way that sort of I approached it was like, what should the product be? Like, let's take everything that we've seen, everything that we can think about, and just like from the beginning, like, how should one build an exchange? And I think that crypto exchanges had a lot of innovations that like were crypto specific. They had a lot of innovations that were not crypto specific and probably should have been everywhere. And also they had some problems that were because they hadn't bothered looking sometimes at how traditional exchanges had been formed.
Right.
And combining together the best of both parts. But I think before we turned on for customers, I sort of think in some ways it was already like a much cleaner product than what like most of the other venues were. And it was a little bit of right place, right time. Like people were hungry for like new platforms at the time. And we had no idea how to get customers. That's why I thought it was going to fail. But I think we always felt pretty good on the product side, and we've just kept pushing forward there. And I think that like that's maybe part of the biggest thing was like not just having a better product at the beginning, but like not stopping.
Right.
Once you get there, so many companies in tech and fintech and in crypto seem to just sort of like, they build a good product and they're like, great, we made it, time to stop innovating.
Right.
And I think all the upsides in pushing forward.
Right. All right, so can I frame you for a moment before I let you talk?
Sure.
Because, can I mansplain you? All right,
Go ahead.
because your story is really interesting to me, and we were talking about this a little bit backstage. So Katie actually went to the Stanford Law School and studied with Sam's mother.
And father.
And father. So,
They taught me
there's
what
that,
I knew
but they
about
had
law.
actually never met in person until just now.
Well, and for a couple decades.
Right.
Like,
Since
Sam
then.
might be the
you
first
saw him
person
when
in
he was a
crypto
little-
I ever met.
She knew Sam when he was a little kid. And so there was a whole bunch of things interesting about your biography, but but like Sam, you're not a religionist. You didn't come at this because you were born to be in crypto. And what's also interesting about you is you've just raised the biggest venture capital fund ever run by a woman. And it has been, I love that our male audience gets it, but so this has been like a perplexing to me throughout my career in finance, is that over and over you see men screwing up money. I mean, like the 2008 financial crisis was such a male thing. It was such a male, overconfidence-driven thing, right? And no one in the world framed it this way, except as we were talking. The Icelanders actually, it was small enough society, they saw, the women in Iceland saw, the men did this. We're going to get rid of the men in the banks, and we're going to let women make all the decisions from now on. And there's all this social science research showing that, like, there's a reason men screw it up. They're overconfident. And there's some research showing that women are actually better with money, like better making financial risk decisions. So it's amazing it's taken till now for you to come along, because there aren't a lot of women who are in positions like yours. There are women in finance, but there aren't women who are pulling the trigger with large sums of money. But I would like you to back up, because you really come at this from a strange angle, and tell me like why you're here, how you ended up here.
Well, it's a complete accident, because I was a federal prosecutor for over a decade with the U.S. Justice Department, and I had been doing kind of organized crime, murders, gangs, nothing to do with crypto. And actually, I've been in the space for about a decade. It was about a decade ago. Some of my bosses at the Justice Department came and asked me to look into what was, they said, a criminal technology, Bitcoin. And we should open a case and maybe see what's going on here. Is there a way to shut this down? And like Sam, the one thing that resonated with what Sam just said is I had to figure out Bitcoin. I had to figure out how it worked. And this was in kind of 2012, 2013. There weren't a lot of resources out there online. So I worked with a couple federal agents and quickly kind of realized, wait a second, this is actually really useful. We can do a lot of things with this kind of open, transparent system.
So what was it that had them thinking this is criminal activity?
Well, I think just some of the early use cases, right? Like I always say criminals are great beta testers of new technologies.
Right.
I mean, right? They do make great beta testers. They're always looking for loopholes. It's no different than any other technology. It can be used for good, can be used for bad.
Right.
And so there I was, we were asked, kind of try and shut this down, and the agents and I who were looking at it realized this is actually really powerful. We started leveraging the technology. Back then, it was only the Bitcoin blockchain to actually solve cases. And I always say that in my over a decade prosecuting money laundering cases, I would have far rather a money laundering crime been committed with crypto than with fiat or wires or cash, because crypto exchanges were far easier to deal with in our experience in those early days than banks.
How do you explain to me, because that seems right to me too, that like the last thing, crypto does not seem ideally suited for criminal purposes.
No.
There's a record. That,
Digital breadcrumbs.
Big suitcases filled with dollar bills seems like the perfect technology for criminals.
Right.
So how does it get the reputation? Why does it?
Again, it's
why
just
does
the
that become an
origin
idea?
story. But remember, Michael, like back in the early days of the internet, I mean, I remember Janet Reno, the Attorney General, once had a quote about the internet's only good for fraudsters and pornographers. I mean, this is just how the early days of the internet were. Very, very early, right? Some of the early use cases. But of course, quickly, it was realized that there's a lot more beneficial use cases. And so then I established the US government's first cryptocurrency task force with the idea of building bridges between regulators all over the country and those early players, because again, this was far before Sam's time. It was crypto was not inevitable back in those days.
So like Sam, you're coming from an institutional world, a completely different legacy institutional world. You're the law. He's Wall Street, and you're entering this from that world with this odd perspective.
Yep.
How do you actually get yourself in the position of being an investor in crypto?
Well, actually, through the work that I was doing for years there at the end, I started meeting some of the early crypto pioneers. Many of them are household names now. And I joined the board of Coinbase. I was actually, what job I was going to go do instead, but I...
Can you stop for a second? You said Coinbase. When he said FTX, or I said FTX, everybody cheered. And when you said Coinbase, I didn't hear anybody cheer.
Okay, come on.
Yeah. That seems unfair.
So I joined the board of Coinbase as their first independent director in 2017.
Right.
And that's how I got involved in the space, and then met some venture capitalists, early crypto funds, and decided to join 𝗦𝗔𝗟𝗧 and stand up with Chris Dixon, the first crypto fund. And then after 3 crypto funds, decided to go raise my own.
I would love for you, it's so new. I mean, it must have been such an odd experience.
They feel bad about the Coinbase thing.
No. It's such an odd thing to go from the world you went from to the world you went to. Can you just describe your first investment, the first thing you saw and you said, I'm going to put money into that?
Well, my first investment with 𝗦𝗔𝗟𝗧 was a stablecoin project known as MakerDAO. It was one of the original DAOs. So that was my first investment with them. I guess my first investment in the crypto space personally was Coinbase. And I voted with my feet, and I continue to serve on that board proudly. And I would say, so crypto, look, it was a butterfly moment. I got assigned this case, but why I stayed in the space, I chose to stay in the space, and that's because to me it brings together all kinds of fields in a way that no other field does today. Science, technology, entertainment, culture, law, policy, economics, philosophy. I mean, name for me another discipline that does that. And so
Journalism.
Okay.
And there's one.
Yeah.
So, but I completely get it. You get to wander.
You get to wander, and it's just part of, I've always said do a job where 50% of the job cold, and then almost 50% could be new. And I think that process of kind of continuous learning has really been something that's motivated me in my career.
So now you're on your own. You've left 𝗦𝗔𝗟𝗧.
Well, I'm not totally on my own. I took a great team from 𝗦𝗔𝗟𝗧 with me, and we hired. In fact, we're announcing tomorrow some of our new deal team hires. So I'm not totally on my own.
So let's start with you on the next thing I want to talk about, and that is the current state of investing in crypto. But both of you are, in addition to being exchange, you have your own venture capital fund, basically, right?
We've done some investments together, as a matter of fact. Yeah.
How does explain to me what the world looks like to you now, how you're thinking about investing in crypto, and how it's different from maybe how you were thinking about it when you first started?
Well, how it's different than when I first started is I think now the world of tokens has really exploded, and I think that most crypto funds now realize that there's great value and venture-style returns to be had in equity, in traditional equity businesses, but also in tokens. So I think the explosion of tokens is something that's changed. Things that I'm very excited about in terms of investing is we invest in all layers of the tech stack. We also invest in picks and shovels companies, in equity businesses. But areas I've been spending a lot of time are in the area of digitally scarce goods. You know, it's NFTs, and people will say, oh, NFTs, like digital art, like 𝗣𝗿𝗲𝘀𝗀, like CryptoPunks. And I always say it's much more to me than just digital art. I think we're just in the beginning. You can't judge the current state of innovation with the end state of innovation. And I see something really powerful, really a new business model for the internet when you're talking about the ability to own a good that's digitally scarce. The fact of the matter is, Michael, as you know, like it's a generational thing, but you know everything is going digital. Books, photos, media. Why would we think goods wouldn't too? Well, they have, and that's why in-app game purchases are a $60 billion a year industry. But if you think about it, you don't really own those goods. You're really renting them, and you're renting them from platforms. Platforms, whether they're gaming platforms or whether it's a platform like Amazon or Facebook or any of the big tech companies. And I think now what NFTs unlock is the power to own something digitally scarce. And I think this is fundamentally going to change consumer expectations. Consumers will no longer be satisfied with basically renting something that they're paying for. They're going to want to own it. They're able to own it, and then they're going to be able to take it across different platforms. So I think we're just scratching the surface on that. And then other things we're very excited about is kind of some of the architecture and infrastructure, scalability solutions. I'm excited to hear talks later today and throughout the conference on ZK technologies. We can talk a little bit about that, but I think that's an area that we're seeing a lot of activity in.
If I'm sitting in your office watching what's walking through the door, what is walking through? Is it you have a theory of the world. Is the theory of the world confirmed by the business ideas that are coming in? Or is there like a mismatch there? Like you're wondering where the businesses are that you think should exist?
I think it's really important in this space, especially not to have preconceived notions.
Yeah.
Because if you did that, for example, many times you wouldn't have invested. I talked to a lot of investors back in 2017, 2018 who said they won't touch tokens.
Huh.
So I think it's very important to kind of continually be examining.
What is it right now that people won't touch?
Well, I think it depends on the appetite of the investor.
Right.
And it depends on the mandate from their LPs.
Russia.
What, Russia. There we go. So explain.
OFAC, other OFAC related.
So FTX Ventures, that's what it's called, right? So tell me how you think about the world as you deploy that money.
Yeah, so one piece of it which I sort of want to put to a side are like acquisitions for FTX. And those are, you know, in large part like what businesses are really positive sum with FTX, right? What fits well within what we're looking to do. If you sort of leave those aside, then I think there's sort of, you know, one piece of this is basically what products do we think make sense? Do we think there's demand for? You know, there are some areas that we're like very interested in investing in because if we see a good project and good team coming out of it, because you know we just like are confused why no one has done a good job there yet. But I think, you know, even more than that, like just really great execution is I think the thing that like we like to see more than anything else. Like a team that is going to keep pushing and push hard and get wherever they're trying to go.
Can you give me an example of something you invested in for that reason?
Yeah, I mean, I think that like, I think, you know, one of the early investments obviously we did was Solana, and you know, it was both sort of a product that we thought there is an absolutely huge demand for, which was scalable blockchains, and also a team that sort of saw that and cared about getting there and wasn't sort of like dismissive of like, you know, well, how are you going to scale the next, you know, 2 orders of magnitude? they're like, yeah, no, we really need to. Let's talk about that and talk about what products we need to be able to scale to, what the important properties are. Here are our thoughts on how to get there. Here's sort of a sketch of a roadmap. Here's what we're working on. And it was just a much more sort of proactive and constructive attitude than like, whatever, we sort of had some product. It fills some niches, not others. It sort of is what it is, and just sort of like trying to come up with bullshit to fill in like the places where maybe it isn't there yet. And sort of like, pretend that it either doesn't matter or that maybe it already is there. So I think that was one of the early ones that we had conviction in. And there have been a bunch since then, some of which aren't public, some of which are. I think and I'll give one other actually, which was an acquisition, but it wasn't our typical type of acquisition,
right.
which was 𝗬𝗍𝗲𝗀𝗲, which is a video game. And I think we see really, really huge opportunities in like Web3 gaming, but we really think that the product needs to be massively better than what we're seeing today. Like they have to be great products by any standard before it makes any sense to start putting them on the blockchain. So we're looking for like what is just a really well done game with a hungry team that's going to keep building and getting better. And it's going to do what's right for the users, whether or not that means putting Web3 in it.
So there are these walls in the world between customers, people who are traders, investors, and crypto. These regulatory walls or regulatory inefficiencies. How much time do you all spend thinking about like where regulation might go? And let's talk a little bit about, especially U.S. regulation. What do you think why are we here to begin with, right? Like why'd your business end up here as opposed to, and it's a dumb question, but I want to hear the answer, New York City.
Yeah, totally. I mean, it's what I spend probably more than half my time thinking about nowadays, and I'm shuttling back and forth between here and DC, every week or two, and basically like, if you look at what the state of regulation is in many jurisdictions, including in the United States today, there are a lot of cases where the prevailing attitude is that you need a license in order to operate a business, but it's not clear there exists a license that you could get for it. And, you could sort of like say, well, why don't they then issue, license or something like that? And obviously, why are we here? One of the big reasons that the Bahamian government actually took the lead on doing that. But there's a lot of differences that maybe aren't always fundamental differences. Some of these, there's like clear analogs to traditional finance, right? Instead of talking about the board of directors of a company, you might talk about on-chain governance. But the regulations might not have a clear pathway for registering an asset that has those differences. Like it just doesn't quite fit. And you could totally imagine a system with the same principles that did, but if that's not there today, and it's not there today mostly.
So why isn't it there today?
Well, I think why it's not there is because mostly regulators think of crypto and all applications having to do with crypto as financial use cases. And I think one of the things that we spend a lot of our time trying to do is explain that only a fraction of crypto are financial use cases. There's a whole other world out there for Web3 and crypto that has nothing to do really with financial use cases, or at least, as Sam said, doesn't fit as neatly. I mean, we talked about digital goods a little bit, digitally scarce goods. What if someone might want to buy that because they're a collector? Someone might want to buy that because they're a fan. Someone also might want to buy that because they think it's going to go up in value. Does that make it a security? We would say no. And so I think just viewing it through the lens of financial use cases only is one of the things that's held back the regulatory framework in the United States.
Do you feel like U.S. regulators are getting an education and that there's hope here, or do you think that basically legacy financial institutions are going to keep the wall intact and make it very hard for you?
Well, we know they're trying to keep the wall intact.
Yeah, I mean, I think both. I think there is a lot of progress being made. I mean, there are also some that are fighting against it.
I mean, one of the things that interests me just talking to you all about your industry is you look at the existing financial system and you look at what's been built outside the existing financial system by crypto, and the crypto version is better. It's like it eliminates all kinds of middlemen. It eliminates all kinds of rents. But the people who get those rents are really pissed off at the idea of having them taken away. And they haven't. I've watched this with the book I wrote called Flash Boys, about these people came in and tried to change the system, make it more sensible. And it was extremely hard to do. Like how does this move? You must think about this all the time, because when you invest in businesses, it's going to turn on whether you get the
one of the things we look to is, you know, what is the likely state of regulation for this particular business category. And I think, like Sam, I'm optimistic. I do think it will depend where the future of crypto, where the hubs will depend on the quality of the regulatory frameworks. And we're already seeing that. You know, we're already seeing places like Singapore or Dubai here in the Bahamas. But I also think that, yes, the U.S. regulatory ecosystem has been far behind, but also realize that, like, you have Delaware, right? Delaware is a hub for LLCs. Why is that? Yeah. It's because of the quality of the regulatory frameworks, and they have specialized courts and specialized knowledge. So I think that the jurisdictions that take the Delaware approach are going to really attract some of the best and the brightest new companies, new projects.
We only have 3.5 minutes left, and I'm dying to talk about Twitter just a little bit. So, Sam, can you briefly give me your take on why it isn't insane for Elon Musk to buy Twitter?
Yeah. So maybe taking a step, back from the details of it. Like, Twitter is one of the most important things in the world. Like, if you think about what impacts policy, what impacts markets, what impacts media, what impacts culture, Twitter is right up there. It is one of the most important public forums. And I think at the end, that is probably a lot of the reason why he was excited about it. You can look at that from a financial perspective. I think it could be way stronger financially than it is today. And I think that there are a lot of things you can do both on the revenue and the expense side. I also think that there's a ton of expansion opportunities for what Twitter could be, for having a creator economy in it, for having it start to, have more integration to more aspects of people's lives. But I think a lot of it is also just really, really important. It's really important what it does. The moderation policy obviously has been, the part I think, Elon's been talking about the most. I think more generally, just all the decisions that are made by the company will impact the world. And I think that's a lot of it. I obviously have been thinking about it from the blockchain perspective as well. I think there's something really cool you can do there with
What can you do? Explain that really briefly.
Yeah, so really briefly, basically, if you put the actual social media messages, the actual tweets on a blockchain, if that's where they were stored, you could also do this with a centralized open ledger with an open API access. But the core thing is, if that's where they live, rather than sort of guarded by Twitter, then anyone can build on them. So 3 entrepreneurs in India could go create their own social media network, around music or around cricket or around food or around anything, that could draw on all of the existing messages, that all the messages on it could write to that same blockchain. It would be interoperable with all these other platforms. You don't have this giant network effect barrier. You don't have this dumb thing right now where if someone posts on Facebook, you can't see it on Twitter, and vice versa. So you get that interoperability, which I think is incredibly powerful, and you get a lot of people to build out your own network for you, which is
Do you have any reason to think Elon Musk is interested in this idea?
I don't know if he's, certainly he's interested in crypto. He's interested in Twitter.
Right.
I would guess that he's thought about, but I don't know what he thinks.
And there are other founders who are working out there now today. We're starting just to now start seeing them on a decentralized social networks. And I think one of the exciting things is you could imagine a future world where you replace these ad-based models with some kind of micropayments or something to tweet. So I think that's interesting. One of the reasons I find the whole Twitter thing interesting is more from a First Amendment perspective. And we were texting a little bit about this yesterday, is a lot of people still don't realize that in the United States, even I talk now to founders even, and they say, well, the First Amendment, Twitter's violating our First Amendment rights. And I always point out, no, it's the government. Only the First Amendment in the United States, with some limited exception under some state constitutions, only protects the government. is only applied against the government.
Right.
And so that used to be okay where the government owned the town squares, right? The government couldn't restrict free speech there. But today, the town squares are digital. And so I think it's really interesting that private companies now own those digital spaces and the equivalent of digital town squares.
It's always the loudest people who complain about being silenced. And they're never being silenced. We are, however, being silenced because we're out of time. And we've lost our First Amendment rights in the Bahamas, and we need to go off stage. So Sam and Katie, thank you so much for spending
Michael.
time.
Thank you all.